What's up, traders? I'm Hotshot. I am not an educator. My educator is ICT. For free education, check out his YouTube channel, The Inner Circle Trader. With that being said, this channel and video is for entertainment and my own learning purposes only. This is not financial or trading advice. Please trade at your own risk. Now, to begin this video, I want to give a huge shout out to Dark Matter Mike, Borsa Balarabi, Steve Archibald, Kim H, Seb FX, all of y'all, if I miss someone, I want to just say I appreciate all the comments I received on the last video, on previous videos. You guys have been giving me some phenomenal insight, answering my questions, and helping me understand where I'm going wrong, what needs to be perfected. If you guys are interested in seeing what they said, check out the last video, check out the comments, go see what they said. I feel like there's a lot of value in that video, but also in the comment section too. Now, also, a lot of y'all were asking if we can make a Discord or Telegram, things like that. I created a Telegram channel for us to all communicate. We can all discuss and agree upon the correct way to approach a setup so we can all be taking the same exact setup, all following the same exact strict and disciplined rules. So that way we can all chase profitability together. So I will be leaving the link to that Telegram channel in the comments down below. It is going to be free to join. Join it. Let's talk. Let's build a community of students. I think this is an awesome opportunity. And to be honest, you guys, whenever I started this channel, I didn't expect it to get the kind of support that it's getting, the kind of support that I'm getting. I just want to say from the bottom of my heart, I really do appreciate it. This has been a great experience. I am loving the feedback, criticism, everything that I'm receiving. So with that being said, go join the Telegram channel. Thank you guys so much for watching the videos. Thank you guys for all the support. Now for this video, I want to focus on ICT Silver Bullet. And I'm not going to do like the regular back test that I usually do where I scrunch it up. This time I'm going to do it in hindsight, see if there was any setups that potentially happened today even. I know that it's from 10 to 11. We're going to be looking for the setup. Now, one gentleman, Dark Matter Mike, I believe, let me know that ICT had mentioned in his market review video for the 12th. He mentioned the silver bullet setup, and it actually formed on the 5-minute chart. So I know that he says like it'll happen on the 1 minute, 30 second, 15 second. However, he mentioned that today it happened, or on that video, it happened on the 5-minute. Also, with the silver bullet, I was misinformed that you have to take the entry off the second displacing fair value gap. You want to wait for the first one, and then you take entry like once the first one happens and it taps into the fair value gap and then displaces away too, and then you enter on that second one. That's all wrong, you guys. That is all wrong. I have been informed that you want to take the entry off the first displacement. So if you look here, like let's just say, for example, let's just drop to the 1 minute. I see a fair value gap right here. You see that price tapped in and started moving away from it. And if you would have taken that trade, you would have been a winner on the 5-minute. If we go to the 1 minute, let's see. So you want to look for the liquidity run. Once the liquidity gets ran, you want to look for the displacement. So here's the liquidity run right here on the 1 minute. And then here's a move up. And then here's the displacement. Here's a displacing candle, just displacing. And this is another displacement candle right here. Now you can see here's a fair value gap. Boom, 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 boom. Here's ICT 1 minute silver bullet model. You take entry there. Stop loss is going to be 5 handles. And your take profit is going to be 5 handles. At 5 handles, you're going to take half of your position off. You're going to pay yourself as a trader. You're going to claim partials, and then you're going to cut your risk about halfway. So regardless if price wants to come back down to your stop loss, you already claimed a little bit. It'll stop you out, but you're still going to be ending a winner. Okay, but you can see here it actually hit 10 handles. And if you would have held, it hit way more than that. It actually went up quite lovely for today. So that was a beautiful, silver bullet setup right here, right in front of us. Here's the displacement. Here's the fair value gap. Now let's say that we got stopped out here and it wanted to come in here into this fair value gap. I would have taken a second entry. I would have taken that opportunity. Maybe it wanted to come for a deeper retracement, but that's all up to you. So let's also go back to the previous day. So this was today. It was Thursday. Let's see what Wednesday did from 10 to 11. Wednesday from 10 to 11. Okay, so right here, if we bring our replay button back, again, this is hindsight, you guys. I'm confirming the correct way. Okay, so if you notice here, here's liquidity run on a 5 minute. Now we want to focus on the 1 minute, 30 second, 15 second. ICT pointed out in one of his videos that it was on the 5 minute, but let's stick to the 1 minute in this video specifically. You can see a liquidity run here, price displaced, but also ran out a little bit more liquidity here. Liquidity run doesn't have to be by much. You can see that it wicked up a little bit. That's still considered a liquidity run. Here's the displacement. Here's the first fair value gap. Let's say that you entered on that one. Boom, boom, boom. There's also a fair value gap here, but let's just say you took entry off this one, right? Take entry, 5 handle stop. We got stopped out, right? Then let's say you got stopped out and you're like, all right, well, there's this one right here. Let's take entry off of this one. You cut your risk, let's say you lost 1% right there. Now you're going to enter a 0.5% risk. That's ICT's risk management. There's a video of risk management that ICT has posted on his channel where he talks about this. If you lose, why are you going to continue to risk the same 1%, especially if you're on a losing streak? If you lost 3 trades in a row, why are you going to continue putting the same risk up there whenever you're on a losing streak? Cut your risk. So if you lose the 2%, cut your risk down to 1%. If you lose 1%, cut your risk down to 0.5%. If you lose there, cut your risk down until you want to stop. I personally stop at 0.25%. That allows me to take an insane losing streak and still only be down on the account like 4%, 3%, nothing crazy. And whenever you catch a winner, you want to make a certain amount in order to get back to that, to a point where you can increase your risk the next trade. But if you guys want to learn more upon that, I can make a video on that in the future. Let me know in the comments down below. But let's say that you take in this entry, right? 5 handle stop. Look at this one. Beautiful. It hit a 1 to 5 R. You could have caught 25 handles off of this one right here. So this is, the silver bullet model on the, wow. You know what? That clears up so much confusion. I want to say thank you guys for really actually commenting, because you guys are helping me out so much as a trader. Let's see, from 10 to 11 right here. Boom. Let's see what happened in this case. 5 minute, it ran liquidity right here, displaced down, and then it didn't tap into the fair value gap on the 5 minute. So I'm going to stay on the 1 minute again. You can see here is the run on liquidity right here. And even then it had a run on liquidity here too. If let's say that you had a run on liquidity right here, displaces away. Here's a tiny little fair value gap. Oops. It's tiny. Now, again, in my last video, this varies by trader. If it's a tiny one, are you going to take that entry? If it's a big one, you know what I mean? It varies. But in this case, I'm going to take it. 5 handle stop. It's going to be down here. We're going to target another 5 handles. And this was a winning trade. Beautiful. Now, we pay ourselves as a trader, take partials, cut our risk. And obviously, we got stopped out, but we still won on this position. We cut our risk. We still ended this whole trade profitable, even though we got stopped out, right? It's awesome. Now, right here, if you notice, ran out liquidity here. Boom. Did it run out this one? No, it did not. Ran out liquidity here. Here's the displacement. Displacement candle down here. Here's your fair value gap. Boom, boom, boom. Look at this one. Sell here, 5 handle stop, 5 handle take profit. Beautiful. This setup forms every single day. They cannot hide it from you. They can't take it from you. In the words of ICT. This is awesome, you guys. This is awesome. You know, it makes me happy that you guys are helping me understand this. This is phenomenal. Let's go back to the previous day. So this was Monday right over here. Let's go back to Monday. Okay, now 10 to 11. 10 to 11. Boom, boom. Drop to the 1 minute. Let's look for that liquidity run. Look at this one right here. Liquidity got ran out here. Right here is liquidity, got ran out, began displacing away, displaced away, created this fair value gap here. Boom, boom. And it also created this one here. Boom, boom. And look at that. And it even created one right here. Boom, boom. Let's say that you took your entry off of this one up here, right? Say we bought here with a 5 handle stop loss. We never got stopped out. Never got stopped out. 5 handle take profit. Look at that. It moved up, came back to our entry. You know, it probably tapped into these fair value gaps again. Again, you could have entered down here. You know, if you would have entered down here, 5 handle stop, you would well hit your 5 handle take profit if you enter down there. But let's just say that we prioritize this one, right? We still won. We're still a winner. This is crazy. They cannot take this setup from you with forms every single day. Love it. I love it. Now let's go back to last week. I'm gonna delete everything on my charts. Let's go back to last Friday. Let's see if it happened on Friday too. Friday, 10. Or actually, it doesn't let me go to 10 on Friday. What happened on Friday? Oh, it was Good Friday. That's right. Let's go to Thursday. Thursday was 10 to 11. Boom. Let's go back here. Okay, let's go to the 1 minute. Let's see, where's the liquidity run? So ran out liquidity here. Ran out liquidity here. Displacement or a small fair value gap here. Of course, it's not in our time, right? But let's see. Didn't really run out liquidity here. Didn't really do it. Maybe on the 30-second or 15-second, it ran out something. But even then, you can see there's some displacement here. It started displacing up. Here's a big displacement candle that created, look at, there's this fair value gap, and there's this fair value gap. Boom, boom. Let's just say that you've seen the displacement. It didn't come after liquidity, but let's say you were like, I want to gamble today. I don't recommend gambling, but let's just say, I want to gamble today. And you've seen that displacement candle. Boom, it taps it. You enter, right? 5 handle stop. 5 handle take profit. Beautiful. This is sick. Now let's see. Look at right here. It took out liquidity here, right? Took out liquidity here. Boom. Once it took out that liquidity, displacement. Boom. Here's your displacement right here. And here's your fair value gap. Right here. Boom. And this is where you take your entry. Boom. 5 handle stop. 5 handle take profit. They cannot take this away from us. This is awesome, you guys. Now I see it. In the last video, someone, I believe her name was Kim. Kim had mentioned you missed the silver bullet setup on your 4-5 example. There are two tiny gaps that form 3 minutes into the 10 a.m. hour. You know, now I'm seeing this. Now I'm seeing it very clearly. Let's see. But yeah, let's go to the 4-5 example that she's mentioning. The 4-5 example is 10 to 11 right here. 10 to 11. Make this back. Okay. Move the one over. Move this one 6 minutes over. Boom, boom. Okay. Where did I miss it, right? Where did I miss it? Okay, so here's one on liquidity right here. Boom, run on liquidity. How is that a run? Well, you see the little candle right exactly at 10. This candle ran out liquidity. So that's the run on liquidity right there. Here's the displacement down. Once it displaced down, it didn't really provide us any I don't see. Or actually, there's a tiny gap right here. Maybe those are the little tiny gaps that form 3 minutes into the 10 a.m. hour. 3 minutes. 1, 2, 3. No, she's right. She is right. You know what, Kim? You are an all-star. You know that? You are phenomenal, Kim. Great job. This is awesome. Look at there's those three little gaps. Let's see, is this one? I see two. I don't see the third. I may be missing the third, but I see two, and she's right. There are gaps right here. Let's say that you would have taken your entry off of this one. Boom. Five handle stop. Five handle take profit. Beautiful. Very awesome. Kim, you're phenomenal. Now let's just say it ran out liquidity right here too. Look at it ran out all this liquidity right here. Relative equal highs, ran it out, displaced down, created this gap right here. Let's say that you entered in this one too. Entry right here, five handle stop, five handle take profit. They cannot take this setup from us, you guys. I hope you guys enjoyed this video. Again, if you guys did, drop a like down below, comment. Let me know if I'm still approaching it wrong. Let me know if there's something that we can critique and make better. But this video is so good. I like it. I think this is awesome. I want to say again, I know I've said it so many times, but I appreciate all the help. Check out that Telegram channel. Until next time, you guys, thank you for watching. Hot Shot out.